Good morning, traders. It is Wednesday, November the 5th. Taking a look at the charts, I'm going to start off with the U.S. dollar index. This is the 15-minute chart showing the later half of yesterday and, of course, overnight trading. So late last night all the way to this morning. The U.S. dollar has exploded to the upside, up about 0.5%. And as U.S. dollar started to really pick up speed to the upside here, we're seeing precious metals get hammered this morning. If we take a look at the charts, this is more or less the same time frame for gold, more or less as the U.S. dollar started to rally late last night and this morning. Gold has crumbled. Gold is down 2.5% this morning, and silver is down almost 5% this morning. It's going to be a complete bloodbath in the precious metal sector. We're going to see gold miners probably get hammered extremely hard. And let's just zoom out to the monthly chart for precious metals. Taking a look at gold. This is a long-term monthly chart. I put a Fibonacci extension, so we've got this move down. We've got this consolidation, which we were hoping was going to be a basing pattern. Again, we need to break a significant pivot high here for this consolidation pattern to turn into a true basing pattern where we see it actually form a base and we see the price move up. Instead, it's just broken to the downside, and our downside target for gold is actually going to be all the way down, potentially down to the 800 mark. And of course, we look at that across here, and we've got this significant pivot low and more or less a high volume area. Somewhere down in this zone here, we've got all this high volume support area. So we could see gold just continue to erode and give way for several more months here, which is not what everybody really wants, but it looks like that's what's going to be happening. Now, if we take a look at silver, again, silver on the monthly chart, very similar pattern, very ugly. We've got a Fibonacci extension. We've got this move down. We had the bounce, and now our downside target is all the way potentially down to the $8 mark, which is this previous pivot low. It's also this big consolidation through here where price broke out to the upside and really triggered into a big bull market there. So there's the market is eroding. The monthly chart extremely weak. U.S. dollar is very strong, and if it can break these previous pivot highs we've seen on the monthly chart, if we just go to the monthly chart here, let me zoom back even more on the dollar. If I can get this chart to zoom back here. Okay, so that is zoomed all the way back. Anyways, if we could continue to see this dollar climb all the way up here, it could still run. We're looking at another more or less 3, 4, potentially 5 cents in the U.S. dollar index, and that would be a very significant move that'll continue to put pressure for several more months on precious metals. And from the looks of it, precious metals still have several more months of free fall and get back down to original levels that is going to wash all the longs out and definitely cleanse the market, and it'll probably be stagnant for some time after that. So that's kind of what could be unfolding here. Looking at the big picture, it is pretty nasty for the precious metals sector. Now, jumping over to the indexes, let's just jump over to the S&P 500 futures. And we'll just go to the daily chart. This is the daily chart. Continue to see equities move higher this morning. I pointed this out over the last few sessions. Really, the market's overbought, but we're in a strong uptrend here, and the market can be overbought for an extended period of time. I think we're going to get into something like this where the market just continues to slowly grind, inch its way higher, climbing up the 5-day moving average, and we'll start to see some chatter. Eventually, we'll start to see some type of pause or pullback, but I think there's so many people trying to short the market. I think it's just going to continue to go up and run those shorts out, and it's going to take a week or two potentially before we start to see price actually have some type of a pullback. So anything real significant anyway. Now, taking a look at bonds, we're seeing money continue to flow out of bonds. Money's going into equities this morning. Bonds have been holding fairly tight. They're just trading sideways here the last couple of sessions. I do feel as though we're going to see a downdraft in bonds, and we're going to see a pop in equities. And I think when that happens, it could be a great opportunity to get into bonds. Now let's just take a look at the monthly bond chart, see what that shows here. Monthly bond chart, we did have that massive spike there. It came up right into this cluster high, this little mini head and shoulders pattern. Overall pattern here is still very bullish. We've got strong on balance volume, and we could easily, I think, see bonds go all the way up and actually test this previous spike high. So there's lots of potential as the equities market starts to roll over. I think we'll see bonds pick up speed and get up to this level. Now, eventually, I think bonds are going to are really going to collapse in price in the grand scheme of things. But again, this is, look at this chart. This is going back all the way to 2000. So eventually, this pattern here looks somewhat bearish. It's a little bit of a bear flag coming up, and we'll see how this unfolds going forward. But right now, the equities market looks like it is eroding. The Russell 2000, the internals are definitely getting weak, and I think we're going to eventually see more downside, and I think bonds will end up holding up, and they could be trading up here for quite some time, continue to run higher, and they could even poke to new highs. So again, we take it pretty much one day, one bar at a time per chart, and just react accordingly. Now, taking a look at gold miners real quick, the GDX, let's just jump down to the daily chart here. Well, here's the monthly chart. We'll just zoom in a little bit. Here are the previous pivot lows down here around the 17, about 16 level. We've come all the way down to this level. It's pretty key. You can see huge volume here. We're seeing finally some real capitulation volume, some massive. Everybody's moving out of it, and I think there's room for a lot more downside. If we look at the Hue index, which is the gold bugs index, and zoom out even more, I got a feeling we could see something which is not what most people are expecting. Most people are expecting a significant bottom in gold, but I think we could easily see this market continue to flush down, grind its way out, and I think we could see it more or less just become stagnant for quite some time. And after you get these massive moves, just like the big tech boom, you get these massive rallies, then they go flat, and they flatline. They can flatline for years. You can see here, really gold took a long time for it to kind of break out, change its momentum, and really kind of pop to the upside and show the first signs of significant growth and a new bull market. So this could easily happen with the definitely precious metal traders, and this sector has been hit so hard. I think it's going to leave a scar, and it's going to take a long time to heal, and we could see a really pretty dormant precious metals market going forward. That being said, you never know what will happen, and if we do start to see price action, bullish price action, this market could pick up speed, and we could end up getting a bullish market again. But right now, very bearish, and there's still lots of room that gold miners can still fall. This is a significant monthly low over here, which is where we're more or less at, but we're still in free fall mode. Gold and silver are just starting another leg down, and so are the miners. Really, we've had this big move to the downside consolidation. We're just starting to break down. I think we could see a couple more months of pressure in this sector. Anyways, that's really it for this morning. Looking at crude oil, let me just go to the daily chart of crude oil. We are deep down in this support zone here, this little blue box that I've drawn in here. We had, let me just go to USO ETF. A little bit of a bottoming tail there yesterday, big volume in it, indicating that we'll probably find some type of bounce. We're going to move our stops to about a penny below yesterday's low. If price rolls over and we continue to see it sell off, we're going to just move our stop there. You can do that now. I'll also put it in the email. But overall, if price rolls over and continues to sell off, we want to get down. We don't want to get in the way of this. Technically, we've just had consolidation. We are into a long-term support, so we could get a knee-jerk reaction bounce, which is what we're looking for. If we don't, it could be something just like this. You get a little bottoming candle, and price picks up, and then you just continue to see it sell off, because we are overall in a downtrend. The thing is, we're at this major support zone that we're tagging, and again, you can really see that when we go to the monthly chart. Here's the monthly chart. We've got these significant consolidation, significant pivot lows. We're tagging this spot. We're seeing huge volume, indicating that there's a lot of shuffling going on, money changing hands, and if we don't get a bounce right away, we just want to get out of this play and just move on from there. So that's it for now, and I'll talk to you in a bit. Bye-bye.